once we broadcast. Thank you. Welcome participants to this, our second day of the SME Conference 2020, a partnership between Strathmore University Business School and NCBA. We are delighted to welcome you, and we would like to have a set of opening remarks by Bwana Tyrus Mwithiga, Group Director. Karibu Tyrus.
Thank you, Martin, and good morning, everyone. Firstly, let me start by thanking you all for joining us today. This is the second part of a two-week seminar webinar that we're running along the theme of unlocking SME potential to increase resilience and excellence in challenging times. We had a very active engagement last week, and I thank you for your participation and joining us again. I'm looking forward to a really lively day of discussions and engagements. Firstly, let me start with thanks to the Dean of the Strathmore Business School, Dr. Njenga. I think he'll be joining us later. Professor Kiraka, for your guidance and facilitating and creating the event. We really appreciate the thought leadership and the partnership that we're building together. Martin, for your moderation, I think very, very professional. If you ever wanted to branch into a different line of SME business, I think you would do really well. We also have my colleagues, Stephen Gakuya, who's our head of the business banking segment, Susan, and the moderators and rapporteurs that will be joining us. So thank you all. But also to Mrs. Anne Mutahi, we are honored that you could join us. This has been a journey that we've been on for several years, and we really thank you for your partnership and leadership in the SME segment. And I really do look forward to hearing more from you later on today. So I thought in line with the discussions we had last week, that perhaps I start with a story about a farmer and his donkey. A farmer who had a donkey. One day, the donkey fell, it was doing its work as usual, then out of nowhere, it just fell into a wall, a dry well that had not been covered up well. And it cried and cried piteously for many hours. The farmer was struggling. He was wondering, where do I find the money and the resources to pull out the donkey? What if it has broken its leg? What if it might not be, sort of useful to me again? And then he decided, you know what, it's anyway old, I'm tired with it, and I'm going to, sort of get rid of it. So what he did is that he called his neighbors and decided, you know what, let's just bury it. It will actually be cheaper than trying to remove it and maybe, treat it. And so when they started throwing soil down the well, the donkey realized what was going on, and it cried even more piteously, for mercy. And then it eventually kept quiet. And to everybody's amazement, it appeared actually to accept its fate. So as they continue shoveling the soil, into the well, what the donkey had actually decided to do is that as the sand came in, it would just, sort of shake it off and, step up and step up and step up. And as I continued shoveling the dust, everybody was suddenly surprised when the donkey just, sort of clambered up and wandered off and, and trotted off, It did a little kick, as donkeys do, and seemed to be actually quite happy with how it had recovered. And what's the relevance of this story to the conversation we're having today? Life will always throw us challenges. Business people, I think, live in, we always speak about jua kali, although sometimes we try not to necessarily always suggest the jua is kali out there. But life in business will always be challenging. And the trick, just like the donkey improvised and made the best of what seemed to be a very desperate situation, is to how do you shake off the challenges, how do you build resilience, and recover and trot off happily, to fight another battle and to live. The COVID-19 pandemic has been probably the largest in recent history or in recent memory for most of us. the biggest challenge in business, in society, in the economies that we operate in. But we believe firmly that it can be a stepping stone to bigger things. A lot of SMEs, and we discussed a lot of this last week, and we will see examples and discuss this more today, will recover and innovate and find improvisations that will build resilience. But even better, I believe we'll be better prepared for the next challenge. And I think I speak often about the events that happened, for example, during the global financial crisis in 2008, 2009. I think the lessons from that have made banks better prepared to deal with this crisis. If you think about nearly 19 years ago when 9/11 happened, it changed completely the way we fly, the way planes are designed, the way airports are designed. And I think events like those, the world is better prepared, to prevent them and survive them. And that's what resilience is about. And so the donkey presents us a very interesting lessons from that. NCBA and Strathmore University Business School eSummit presents us an opportunity to discuss and reshape the future for our small businesses. You will hear more about how this is happening with examples from some of our clients, and critically around the critical role of job creation, growth, and protecting, enabling SMEs that we are all participating in to ensure our survival and recovery, which is of paramount importance considering the significance that SMEs and small and medium enterprises have in Kenya's economy. At NCBA, our brand promise is to inspire greatness. We're achieving this by offering our customers the best of both worlds, from the old-fashioned relationship management, where you have a partner on the banking side to help you with your finance, you're structuring your finance and managing your cash flows, to digital solutions that make it easier for you to transact and conduct your business, and investment solutions that enable you to grow and protect your wealth, as well as insurance from NCBA Group. By inspiring greatness, we mean that we strive every day to support our customers, to go for those things that matter most to them. We think everybody, and we believe everybody, has a go-getter spirit, which, if best facilitated, can really help us achieve all our objectives. The bank's purpose remains this purpose remains the starting point for each of the decisions and the interactions that we have with our customers. When I look forward in terms of what we are doing and how we are doing, our group managing director last week talked about the support that we've been providing to SMEs during this period around helping them manage their finances and recover from this period. And we are committed to continue doing so. Ultimately, the key solution and the key outcome that we want is to help you create value in whatever way that your business might change and evolve post the crisis. NCBA Business Banking is setting new standards in terms of the partnership that we have with our clients. You will hear more about the Enterprise Development Program from one of our graduates. We're happy to engage and discuss about how NCBA is not only providing finance or transacting ability, but also the thought leadership from platforms like this today and discussions like what we've been having last week and this week, but also the training that helps you really develop strong foundations for you to grow your family business or expand your business across Kenya in the region. These integrated solutions help a seamless banking experience that we believe is unique in Kenya today. By doing this, we will help you maintain your business, your workers to keep their jobs, and the people that you support and the communities that you operate in get through this crisis even stronger and continue to drive the growth that is so important in Kenya's economy today. As I finish, I want to say that today's deliberations matter. We need to ensure that everything we are doing, both on the business side, on the policy side, from academia, as Professor Kiraka said last week, and the banking sector are partnering effectively and in a relevant way to ensure that the promise of SMEs is enhanced and actually realized, and even in fact accelerated. I do hope you have good discussions today. I look forward to participating throughout the day in the conversations we're going to be having. I will be connecting with you later towards the end of the day and the session to reflect on the key lessons that we've taken away from this process and the way forward as we continue to partner on this exciting journey of helping grow SMEs. I thank you for your attention and we'll hand over back to Martin to conduct the rest of the day's discussions. Thank you very much for your attention.
Thank you very much, Abana Tyrus, Group Director, Retail Banking, for those set of opening remarks that will inspire the. I will be MC for today, as mentioned, Bwana Mwithiga, Tyrus, and look to engaging further. This is a sense of the layout of today, a set of opening plenary remarks. Shortly we'll be hearing from Professor Kiraka, and then we'll have breakouts a little bit later, and we'll hear back from those breakouts and have closing comments. Professor, I welcome you to give and help chart the way forward. Karibu sana. Oh, you're muted, Prof?
Yes, sorry.
Thank you.
Thank you very much, Martin, and thanks everyone for being here. And we look forward to some interesting engagements today. As an overview, I'd like to just say a little bit about what happened last week for the benefit of both those who were with us and those who were not. I'm just going to take a few minutes to do that, to set the stage for the conversations today. So last week's session, we started off with myself introducing the conference and introducing the conference theme about what we mean by resilience, what we mean by excellence, and how the pandemic has affected SMEs in terms of having to rethink our business models, our markets, our processes, our products, our leadership, our service delivery, and all the aspects that relate to our businesses. And what is needed in terms of our intellectual humility and ability to listen and to learn from everybody around us and to work together. This was followed by some remarks from Mr. Stephen Gakuya, who is from NCBA. And he mentioned three key things, or three key questions. And one of the questions was, how do we reboot, rethink, and reorganize our businesses in the wake of the pandemic? How do we retool our businesses, retain our staff, and create more markets and delivery channels? How do we adopt new working methods and processes and keep our staff engaged, especially when they're working remotely? And how do we accelerate digitization and create efficiency in terms of delivery of our goods and services? And those questions actually form the basis on which some of the engagements later on in the panel discussions happened. We were later addressed by the Executive Dean of the Business School, Dr. George Jenga, and he talked about the fact that SMEs are found everywhere in our economy. Whether we're talking about food security, or we're talking about medical equipment and facilities, we're talking about transportation, we're talking about contractors, any sector of our economy, we will find SMEs. And he also talked about the importance of SMEs being networked through investment groups, through cooperatives, and a lot more through community groups. Unfortunately, most of these community groups tend to be informal, and their management and structures are not foreseen by government. And as a result, they tend to be disconnected and lose out or miss out on government opportunities. And he talked about one of the dreams of the business school is that we would have county business development centers that are controlled by at least 1,000 county SMEs in each county. About 1,000 SMEs in each county are managing and controlling business development centers. And we would use these centers as to give voice to the SMEs on issues of policy, data, value chains, cost of doing business, and any other areas that we want to engage with government and other players in the value chain. And so this would become a really important way of getting the SMEs networked, organized, and having a voice. After that, we heard from the Group Managing Director of NCBA Bank, Mr. John Gashora. And Mr. Gashora talked about, again, how the pandemic has affected us, not just in Kenya, but globally. Globally, the unemployment is expected to rise to about 25 million. And locally, we have already 1.7 plus million people who have lost jobs during the crisis. And he talked about the need for us to support each other and to remain optimistic in these challenging times, because these too shall pass. He talked about the role of NCBA in supporting the economy during the crisis. And some of the things that NCBA has been able to do is to extend loan repayments by up to 12 months, to restructure over 50 billion worth of loans, absorbing restructuring charges and waiving fees on mobile transfers and other cashless transactions, and even repaying or announcing a repayment of their 7 billion shilling bond earlier than scheduled as a way of building strong liquidity in the market. And obviously all of this has come at a significant cost to the bank. But this is a time to look out for our customers and take care of them, especially during the challenging times. And NCBA is taking a lead in ensuring that we're able to support our SMEs during this time. We later had a keynote address from the CAS of the Ministry of Industrialization, Trade and Enterprise. That was Mr. Lawrence Karanja, speaking on behalf of the Cabinet Secretary in the same ministry. And he talked about, again, the importance and contribution of SMEs to Kenya's economy. In terms of employment, the sector employs more than 15 million people. And in terms of contribution to GDP, it's about 33.8%. At least that is what it was in 2019. He proceeded to talk about some of the key challenges that SMEs have experienced during this time, and he identified 7 key areas where SMEs are being impacted. One of them was impact on strategy, and that SMEs are finding that they need to outmaneuver this uncertainty and have some course correction in terms of the assumptions that they had, in terms of their strategic direction, and respond to the new challenges and the new changes. The second one was impact on customers. Customers' behaviors have changed. Many of them are now doing business online, they're purchasing online, they're expecting delivery of goods and services, and they're still expecting a superior customer experience. And the question is, how do we ensure that we continue serving our customers well and business continues despite the pandemic? The third impact was on the workforce. Again, we have experienced a lot of disruption to our workforce. People are having to socially distance, working from home, and yet we have to supervise them, and we have to get good or even better productivity than we did in the past. So how do we supervise? How do we reorganize our work shifts? And how do we ensure that we empower and protect our employees so that business continues? The fourth area of impact was on operations. And again, in this area, we have had a significant disruption to business operations, especially when we had restrictions of movement, which impacted some of our value chains. And still, businesses have to figure out how to manage and do their business, not just within the country, but even across the borders. The other one was impact on finance. Many enterprises, obviously their revenues have declined significantly and costs have increased. They're looking for resources. SMEs are looking for opportunities, new opportunities that they can seize, ways that they can be able to make some money and recover. And he talked about the credit guarantee scheme for SMEs. And I think we're going to hear more about that in today's session. And this is aimed at helping to support SMEs financially so that they can recover and move forward. The other impact was in terms of technology. And even before the pandemic, SMEs have always had IT-related challenges. But with the pandemic, this has pushed them even further, and their capacity to use technology effectively has been tested significantly. And they have had to transform very quickly and to adapt in using IT for all their transactions, engaging with customers, debt collection, reaching markets, business operations, and all of the above. And so it's become very interesting in terms of how they have had to rethink how they do business and their business models. And then the last one was impact on the industries. And obviously different industries have been impacted differently with varying degrees of severity. And one of the interesting things is that this last point about the impact of the pandemic on industries takes us to the conversations we will have today in the breakouts, because we are going to be looking at sector-specific issues and challenges in the breakouts and look at how this pandemic has affected businesses in the different sectors. He concluded by asking the SMEs 3 questions. One of the questions was, are we resilient enough to survive in this new environment? And what is the strategy for bouncing back? The second question was, how fast are we to adapt to this new normal? Are we going to be fast enough, or are we going to be left behind and have to try to catch up with those who have moved ahead of us? And the third question was, are we ready to embrace new business models, new thoughts, new ideas, new ways of doing things? And looked and talked about the importance and the role of the government in helping businesses to adjust to what we're calling the new normal. But one of the interesting things is that what we thought was normal before is not actually normal anymore. We've discovered it has a lot of flaws, which is why we needed the new normal, so to speak. So that was from the CAS, the Chief Administrative Secretary, in the, Mr. Karanja, and his remarks were followed by short presentations from 2 of our entrepreneurs who have engaged with both NCBA Bank and Strathmore Business School. So we had Frida Kimathi talking about her business, Card Group East Africa, which is a distributorship business, but they also have some retail shops. And we had Derek Banga, who runs a company called Public Image, and his job or his business entails equipping business executives with interpersonal skills and soft skills so that they can connect better to clients. So they basically just share their experiences as SMEs and how they're managing during the crisis. After their 2 brief presentations, we then had the panel discussion. And we had 3 panelists. We had Kwame Owino, who is the CEO of the Institute of Economic Affairs. And Kwame highlighted 4 areas in which the government should intervene, so 4 priority areas. One of the areas he identified was the safety of workers, and he talked about the cost of testing for COVID-19 being quite high, and yet for the SMEs, they need to ensure that all their workers are safe. So how does the government support them in terms of making it more affordable for SMEs to make sure that all the workers are tested, all of them are safe, and they can continue to do their jobs and to run their businesses. The second one was on job losses. Again, we have lost a lot of jobs, over 1.7, 1.8 million, and that was especially in between April and June, in just 1 quarter. And how can the SMEs be supported to be able to bounce back? And he also mentioned the credit guarantee scheme as being one of the ways that the government can help for SMEs to bounce back and get some of these employees back into the workforce. The other thing he talked about is the need to open up government procurement opportunities to allow SMEs to quickly identify opportunities and do business with government so as to help them recover, and the importance of the government to make prompt payments for services and goods delivered by SMEs. And then the 4th area he talked about was digital transformation. And this theme of digital transformation was prominent, I think, in every speaker's presentation, and that such platforms can help SMEs to access government procurement opportunities, as well as obviously how they engage with their customers. The other speaker on the panel was Carol Karuga, who is the CEO of the Kenya Private Sector Alliance. And Carol talked about how COVID-19 has impacted on businesses. And she identified 5 areas. One of them was obviously the issue of finance and liquidity challenges that have largely affected small enterprises. She talked about business models and value chains being impacted, by the inability to travel or the travel restrictions that were there earlier in the year, reduced consumer demand, and obviously that impacts also on the liquidity and finances that the business has, access to markets, and also supply chain disruptions and the high cost of operations, and also in terms of job losses. And a number of enterprises have had to lay off their staff or put them on reduced income, and others have gone on unpaid leave. So those areas have been impacted significantly. She also talked about some of the programs that KEPSA has to help SMEs to bounce back. One of them was continued advocacy for an enabling business environment. And they're doing a lot with the government on this. They also designed the first SME policy index, which is aimed at assessing how facilitative Kenya's policies are to supporting SME growth. And they looked at 8 dimensions. Some of them were about enabling governance, infrastructure, human capital, access to finance, SME representation, market linkages, and IT innovation and technology transfer. There was quite a bit of encouraging feedback on how the policies have facilitated in these areas, but obviously a lot more work needs to be done. She talked about some of the economic management framework that KEPSA has in response to COVID-19 pandemic. And some of the areas they're looking to work in is prioritizing the health and safety of employees, ensuring the supply chains continue, mobilizing private sector capabilities and resources to continue, especially for the larger enterprises, to continue supporting the SMEs, maintaining high ethical standards, and ensuring that there's clear information that is disseminated, and social stability as well. So they're working in all of those areas. They're also looking for ways to support in terms of finance, access to finance. They have a partnership with MasterCard Foundation to support about 400 SMEs with interest-free loans. They have programs around capacity building, and they have several partnerships to help in training, mentorship, business counseling, and other areas of capacity building. In terms of market access, again, they have a number of partnerships that are promoting market access, for example, with Trademark East Africa. And they're also involved in engagements with the government on some of the initiatives, such as the Kenya-US Free Trade Agreement, and one with the Kenya and the UK, and also the African Continental Free Trade Area Agreement. And they're also keen to look at how to renovate the infrastructure, that is the markets where SMEs conduct their businesses. And lastly, they have an information sharing call center that is on 24 hours, and an online portal where SMEs can get a lot of information related to the pandemic, and also opportunities of how they can be able to benefit in the different areas where they have interventions. And then the last person that we heard from in the panel was Juliana Rotich, who is a techpreneur. She's been involved a lot in technology startups. And she talked about some of the platforms that SMEs can have access to. There's one called scale.co.ke. And this is a platform that enables women, youth, and persons with disabilities to automate their business procurement, especially when they're dealing with the government through the AGPO. And then she talked about the importance of tech startups in unlocking the potential for SMEs, and looking at simple applications that can be made available to SMEs. For example, the M-Pesa app for SMEs, that is for paybill numbers and till numbers. She mentioned about the startup bill, which seeks to create an entrepreneurial ecosystem for SMEs. And she also talked about the need for contactless payments with customers. And she talked about Boya app, which is the one that she's currently working on, that can be an app that allows customers to upload their credit card or debit card information onto a phone, and make all the payments directly from their phone, and therefore avoid having any contact whatsoever with the service providers. So in a nutshell, that is what we covered last week. And we are going to be taking these conversations forward this week in the different breakouts and look at how the different interventions can be able to benefit us in our specific sectors. Thank you very much, and back to you, Martin.
Thank you very much, Prof. That was an elaborate breakdown of what was discussed last week. And we thank you for being able to cover that and give us a sense. It will offer a segue to the discussions this afternoon. I'll share my screen shortly so that we can hear, get a testimonial from one of the entrepreneurs you mentioned, Frida. And hopefully you can see the screen on my, you can see the video on your screens. Professor, just confirm.
Well, it hasn't started playing, but I'm assuming it will.
Yes, it should play shortly.
Yes.
Okay. This video is also available on the conference website. Sound is clear?
You can increase the sound.
My name is Frida Gashie Kimathi, and I run a business called Card Group East Africa Limited.
My name is Robert Kiplagat. I am the Managing Director of Machine Technique Solution.
SMEs are an important part of the Kenyan economy. They employ hundreds of thousands of people and are a very important part of the economic growth of this country. NCBA Bank has a very clear focus on banking SMEs. We provide a whole range of services to many sectors. So what we've done over the years is be very clear about what sectors we support: real estate, manufacturing, distribution of retail products, agriculture, trade, both import and those who trade locally. So with that clear focus, what we've done is provide solutions that are relevant to that sector through a range of products that we have and relationship managers that are well trained to support these customers.
When we began in 2018 June, of course, the first things first, we had to look for who will be our financial partner, and we found ourselves keeping an account and having a relation with NCBA Bank, and NCBA Bank then co-sponsored us to come and study a program at Strathmore University that focuses on enterprise development, that focuses on us as an entrepreneur. How do we learn the new ways of running a business? How do we learn how we can scale up our business from a startup, a small micro company, to an SME, to a large company?
It was highly subsidized, which was mostly the reason I said, what do I have to lose? So I just went, you know. I think it was an 8-week or 12-week course, and we covered a lot of areas that's very important for SMEs to know about how to run your business and how to move to the next level, so that you're not forever SME, but you move more from the S to the M, you know, and in a proper way. And it was extremely useful to me. Also, the networks, the people I met there, we are still doing business with some of them today. And through that course now, I've managed to get to know even other courses at Strathmore that have helped. So, and I would say that was all because of the one course that I decided to take up through NCBA.
Coming into enterprise development program, you're able to find out different ways of doing it, how to professionalize your business, how to structure your business, how to incorporate systems to your business that can then enable your company move from where it is to the next level. Yeah.
And there we have shared a testimonial from some of the entrepreneurs who have been with us at Strathmore, both a combination of Strathmore and our broader partnership with NCBA. And we are quite keen for the entrepreneurs that are gathered here, that you see this as an opportunity to be able to do more through these partnerships. With that recap from Professor Kiraka, we'd like to shift gears. We are now getting to the interactive portion of today's event. I'll share the program in the last 30 minutes. We have gone through a set of opening remarks. We've been told about last week's session. I encourage you to go to the website. We have the full video of last week's session. You should be able to navigate that. I ask you to check your emails. Within the last 20 minutes, you should have received a message with links to 11 different breakout rooms. And a list of those rooms is right on your screen. Manufacturing, retail, hospitality, education, tourism, health, construction, agribusiness, traders or trade, tech startups and innovation, and SME ecosystem. Within our midst, we have a team of moderators who are a set of faculty and administrative colleagues at Strathmore. We have a team of students who are acting as rapporteurs. And if you check just below the chat, my colleague Carol Monene is also going to post a breakdown of all the different Zoom links for each of these 11 breakout sessions. We want to spend about 40 minutes for each of you who is participating in this session in one of these breakout groups to share your perspectives. And the general questions we are trying to answer are as shown on your screens. Number one, what are sector-specific challenges that you are currently facing in this time of COVID, and what are you projecting you will face as you go forward? Secondly, what sector-specific opportunities do you see currently, and do you see going forward? And then thirdly, and this is particularly important because we have all these audiences represented here, I wanted to acknowledge our participants are not only from Kenya, but across East Africa. We had a team sent to us specifically from Uganda, some tech entrepreneurs. Last week we had individuals from Tanzania, and the participants are beyond Nairobi. We had afternoon sessions with entrepreneurs from as far as Kilifi County. Three questions, or a question with three audiences for you. If you had the ear of these three people, the country's president, a bank CEO, and a business school dean, what advice would you have for each of them on how to support and grow the SME sector? So for each of you, what kind of advice would you give them? So in your breakout sessions, which would be about 40 minutes, and Carol, I believe you've been able to share in the chat feature the Zoom link. So for the participants, let me see if that has been sent. I don't, Carol, have you been able to send that? Not yet. Let me see if we can do it on my end also. For each of the participants, hopefully you've been able to jot those questions down. In your 40 minutes, you're going to have a robust conversation, and you're going to come back and report on those. The rapporteurs will assist you to collect that information, gather it in a structured way, so that you can come back and report in sections of 5 minutes, and make sure that as the closing remarks are being undertaken, each of you can share with us your perspective. So let me go ahead and post that in the chat feature. It's a bit of a long email.
It's been posted, Martin.
It's been posted, huh?
Yes, the links have been posted on the chat.
Oh, fantastic. And then also for those who don't have it there, please check your emails. We'll still have somebody remain here in plenary, just in case you get lost, come back here. We'll have somebody to engage with you. So at this moment, I'll request all of us to leave this section. So just leave the meeting the way you would leave a regular Zoom session, and then go ahead and click on the link for your appropriate sections. And I've highlighted what each of those sections are. For your benefit, I can just post it up again. So if you're in retail, click on the link, Zoom link that says retail. If you need to enter the password, enter that. If you're in hospitality, do the same. You'll find a moderator and a rapporteur ready and waiting for you in that room. I'll be with a group that's handling trade, so you should find your rapporteur there. Professor Kiraka will be in the group handling retail, and so you should find your rapporteur and moderator there. So with that, we'll just stop. Julius Wibo, are you live? Julius,
yes, I'm still here.
Yeah, Julius will be here with those who do not live and make it out to their respective rooms. So we are currently at 249. I'm hoping to see that number go all the way down to 0, or actually maybe 2 or 3. For our speakers and panelists, you're welcome to join any of the breakout rooms. When you go there, we'd be keen also to hear from you, or you can just sit in and listen on the sessions. If there are any questions, I'll just say briefly to check text. For Derek and Ampio, tech is also part of innovation. So
yeah, they haven't, Martin,
yes.
not all the links have been posted yet. Actually, a number of links haven't been posted.
Okay, why don't okay, let me do that. I think they may still be coming. Just to be redundant, let me also post from my end. Mine is a long email and it talks about also what you'll do once you're done with your session. It has instructions for returning. So just give me a second, Professor, I'll post this. I'm sending this to all panelists and attendees. Okay, so we have until number 2. So let me post a second one. Picking up from hospitality to education. Hospitality to education, there we go. And then tourism to health. And we've spent a little bit extra time on this, so we'll try and recoup it later. And then construction to agribusiness. And then traders to tech startups. So Derek, you should see your group there now. And then SME ecosystem and back to plenary. Prof, just confirm we should now have links for everything in the chat.
So we have the link for the last one, the SME ecosystem. Yes. So for a number of you are in professional service firms, and I know you're asking where you belong. I think most of you probably belong in the SME ecosystem, which basically talks about everything else around supporting SMEs that is not necessarily in any of the other 10.
SME ecosystem?
Yes, I've seen it, it's there.
Yeah.
So those who are managing law firms, consultancy businesses, you probably belong in the ecosystem one. The number of people who are asking where they belong.
Prof, fantastic. I've been informed participants are beginning to move into their sessions.
Yes, they've been moving quite a bit. We are down to 170. So
good. And wanatusubiri pale.
Yes, we need to get to our breakouts as well.
Okay. All right.
Yes.
So any participants who remain behind, Julius Bwibo is here to guide you. For those who are joining us from Facebook, the live stream, please go to the conference website, and I'll project that for you shortly, conference.strathmore.edu. So for those who are joining, if you go to conference.strathmore.edu, I'm projecting that on the screen. Right at the top, there's a link that says register. So if you're in Facebook and you click register, you'll immediately get an email with a Zoom link that brings you into plenary. Once you're in plenary, we've got all the different links there. So Julius Bwibo, for those who are joining afresh, if they have any questions, Julius, you'll just track the Q&A and you can guide them to the appropriate breakout. Julius, I hope that's okay.
That's okay, Martin. Thank you.
Julius, that's okay?
That's okay, Martin. Thank
Fantastic.
you.
So I will leave you and go join my team in retail.
I'm also leaving now.
Okay, thank you.
I will
and then
here.
Yes, thanks, Julius. And Julius, I'll also share with you, you can post the slides for those who want to see the questions. Those on Facebook maybe can even just type on Facebook and share their insights there directly within the chat feature of Facebook. And then when we come back here, we'll track any comments in Facebook and try and incorporate those insights here. So Julius, you can work with Dennis on that.
Thank you.
Great. You'll receive the slides shortly, Julius. All the best. All right.
Tanya, can you make me host, please? Tanya, can you make me host?
Yes, Julius, you were saying something.
Thank you.
Julius, your screen is blank.
Is it showing the slide now? I'm
Yes, Julius, you're saying something?
sharing the slides.
Okay, go ahead and
The
share.
screen should be showing slides
Wibu,
now.
we can't see anything. I think maybe your internet has a, yeah.
Okay, let me try again.
No, now we can see. Just make it
You
a
can see, yeah?
slideshow. Yeah, slideshow. Make it slideshow so that
Okay.
it can be
Very good. Very good. Okay. So, is that better?
Julius, we can see your screen and you're on WhatsApp.
Greetings, participants. We are having people now coming back to the plenary session. So for those who had been selected to give their remarks, please start preparing yourselves. So there are some who are just winding up. There are some groups that started late, and I apologize, mine was one of those. We started 15 minutes late. Some people were mixed up, but we've come up with very, very good contributions. We have about 20 minutes when we are going to share our insights from each of the plenary breakouts. In the interest of time, we may reduce slightly. As you share your insights, we are also giving an opportunity. Oh, just 1 second, I'm getting a message. Let me share, please come back to plenary. Plenary. Some of the groups are reporting in saying they are starting to redirect people back. So for each of the groups, please, whoever you had identified as your participant, be on standby. Julius, is it, let me just wait for, yes, Julius, we will need to give co-host access or opportunity to speak, or panelist access, as well as Caroline, to the people who will be representing their individual groups. So just look out for them. The moderators and on behalf of your groups, Julius will also need to give access to the moderators. And moderators, just type into the chat function so that Caroline or Julius can give you access to be a panelist.
Yes, we are waiting for that.
Excellent. So I'm one of them. You have all their names, Caroline? John Sergon, Dr. Helen Otieno, Stella Nyongesa, Naomi. So as they come in, just give them access. Good, our numbers are going up. Good, I see John Sergon is there. He can be made a moderator. John, also please give the name of the SME that is presenting on your behalf. You're all going to be brought into the panel setting. So in my case, it's Dennis Okore. Dennis, I don't know if you've logged in.
Dennis, not yet.
Okay. Then in the interests of time, I think we can already go ahead and start sharing. Since the session is being recorded, as other groups join, they'll be able to catch the videos later. Buibo, Sergon, do we have your representative here? Oh, good. Wanjiro Kibe is here representing agribusiness. Ben Mwarania is here representing hospitality. Either Ben or Tech is ready, Josiah. Why don't we start with Josiah? So Buibo, give access to Josiah on behalf of Tech.
Done.
Or Caroline. Josiah, just introduce yourself so that we know who you are. You can, and the floor will be yours. The numbers are still going up, so people continue coming back.
Hello?
Yes, Josiah, fantastic. Go ahead, Josiah. You have 3-4 minutes. Tell us about your world of tech. What would you tell a CEO, a president, and a dean? Opportunities, challenges.
Hello? I give you a host.
Hello, can you hear me?
Yes, we can hear you, Josiah. Go ahead.
Okay, so this is feedback from the tech breakout team. I will start with a quotation. It's very much in line with what's happening. It's from Alvin Toffler. It says, the illiterate of the 21st century will not be those who cannot read and write, but those who cannot learn, unlearn, and relearn. So what have we learned, unlearned, and relearning? With respect to challenges, the challenges are around regulation, risk, both financial and default. The other challenges are around monetizing content, business consulting costs, as well as distance between teams. With respect to opportunities, and I found this interesting from from the Digital Lenders Association. Can you imagine that they had 4 million customers and they were lending 2 to 4 billion shillings every month? So with respect to that, they would like credit guarantee. They would also like a way of streamlining their regulation there was a very great idea around a connector platform, and the other opportunities are around cyberspace and telemarketing. Finally, the 3 questions to the President, the CEO, and the Dean. To the President, tax incentives, grants, access to procurement. I didn't know whether you know this, but there's an association called Association of Startups and SME Enablers, and also enhancing the telco infrastructure. To the Dean, customized low-cost models, case studies from innovation hubs, from business schools, and workshops for capacity buildings for SMEs. To the CEO, low-cost funding and interest to SMEs and startups, also a strategic investor, and looking for a way of integrating the gateways. That is it. Thank you.
Martin, you're muted.
Sorry, I just realized I was muted. Apologies for that. Yeah, Josiah, thank you very much for those ideas. There was something for the Dean, something for government. I don't know if there was anything for banking, but we've captured all those. Next, Patricia Okello from retail. Wibo, I don't know if you've given her access. If not, Dennis Okore. Wibo, you could also highlight who you've given access. Ben Morania from hospitality. Any of those ready?
Maybe I can just mention, Martin, for the retail breakout, our rapporteur was going to project, and then Patricia presents.
That's okay.
If she's able to get rights, and that is I'm forgetting her name now. Sorry.
Okay, we have, that's rapporteur. That was for retail.
Yes.
Okay, so we'll give access to that shortly. Do we have any of the other breakouts ready? Dennis?
Okay, have we heard from education? Martin, have we heard from education?
Not yet, not yet. If they are ready, they can proceed.
Because I think he had requested, because I think he needs to leave, whoever is presenting
okay.
for education.
So education, group 5, please proceed. Geoffrey Otieno. And part of the issue is they may not, Carol, are you able to make Geoffrey Otieno?
Yes, yes, I have promoted him.
Good.
Okay, thank you.
Go ahead, Geoffrey. Thank you.
Thank you very much. From the education sector, we had quite a number of participants, and I'll start with the challenges, then go to the solutions. We had from participants who are running academic institutions. The challenges are fee payment by parents. Cash flow is a very big challenge. The uptake of digital learning is quite a significant challenge to most of the institutions. And then the cost of digitalization is also a challenge that they are facing currently. And in terms of, and also the content, in terms of the solutions, they came up with several solutions. The first key one is collaboration amongst very many partners. And we had one person stating that the education sector needs to look at the international NGOs. They are willing to support in terms of funding, but there's a general fear of international NGOs by many academic institutions. And the participant actually offered to guide the academic institutions that are interested. To the Dean, there's a request for collaboration with various academic institutions in the form of partnership. This would help the institutions learn how to effectively run e-learning, just like Strathmore is doing. And also they are looking for a way for Strathmore to help with curating the content, because there's some challenges around the content that the children are exposed to, especially at primary school level, and then the safety element of the children. In terms of the e-learning players, there are many. but experience is also lacking in most of them, and very few have the experience. Going to the CEO of the bank, the request is around the interest rate. They need to be lowered for SMEs, especially during this period. And then also to change the financial model for the banks with regards to SME, to change from the template approach to a customized approach that is sector-based, based on the impact of the pandemic. And then from a government approach perspective, there was one solution that was suggested that especially in Kenya, the credit guarantee scheme could be tweaked to focus on education in a unique way, because currently the way it's being rolled out, it's for SMEs, yes, but we have academic institutions that fall into that space of SME, and it would be great to have that scheme tweaked to suit the academic institutions. There's also a request to the government to help in the subsidy for online programs, especially looking at the cost. And we went ahead and discussed a solution that has already been implemented in terms of collaboration, just to let everybody know how others are doing it. And we gave the example of Jamhuri High School, where there's been partnership between the corporate world, Jamhuri High School, and the former students who have come together to set up access to students who are in the rural areas, because everybody is home now, and giving them gadgets as well to try and access the learning material from wherever they are. That's it from the education sector.
Maybe tuulize Martin sasa.
Thank you very much for that, Geoffrey, and we've captured all that. We'll check with Carol who can present next, or Julius. So we've covered technology, we've covered education. Have we upgraded manufacturing, retail, hospitality, traders? Carol, Julius, any recommendations on who can present next?
Edda can represent next. Edda?
Okay, go ahead. Yeah, Edda, go ahead on behalf of construction.
Okay, thank you. Thank you so much, Martin. We had quite an engaging discussion, and a couple of challenges are there. So one, we have the issue of limited cash flow because of the job cuts and the social distancing issues that are there, therefore putting to halt the real estate projects construction. Then because of that, because the cash flow is quite limited at the moment, it impacts the books of credit, and hence they're not positive. So when you go to the bank to look for a loan, your books are not looking nice, and therefore you can't access very good credit. Then there's somebody who mentioned that they have new construction units coming up, and when they they put in the electricity meters, they got request from KRA or demand from KRA to pay back taxes, simply because they got that information from Kenya Power that this person has put up 4 meters. Therefore, Kenya Revenue Authority feel that there's rent that needs to be paid from the rental unit, yet the rental units are new. They have not been occupied. Therefore, how do we ensure that we can synergize the communication between the various state agencies such that there is no one that is pushing the wrong agenda with the information that they have? Then we also have the issue of a lot of construction work being given to foreign businesses, the Chinese, the Japanese, and other foreigners. Can we ensure that this is given to the locals so that then the local businesses then can be able to grow? There's also somebody who complained about banks and the bureaucracies, especially when you want a loan and you live outside of the country. So they need documents to be notarized, and this requires quite a bit of time and also takes in money. So there's a lot of bureaucracies that are going on within the banking sector. How can we ensure that this then is reduced and can take a better shape than it is? Then there's also bureaucracy in approvals. Before you can get approvals done, there's quite a long process to being able to get that one. So that takes quite a bit of time. Then we have the opportunities that are there. There's the opportunity to construct COVID-19 hospitals for patients. and of course hospitals in general, and also be able to upgrade the facilities to cater for the patients that are coming on board. And so that is an opportunity that the sector is willing to take up, as well as the Big Four housing agenda on housing. So they are willing to take up that, and it's an opportunity to be able to grow the business. So if we had the year of the president, what would be our advice? One is, can we improve on the Kenya industrial estates? So there's a lot of yards that is going on, but we already have a body, the Kenya industrial estates. Can we work on improving it and making it better operational than it is right now? Then is it possible to get a one-stop shop for all the construction needs? So you have all these government agencies, the different permits that you need, many different offices that you need to go, and the corruption that is there as well. So can we have a one-stop shop for all these things that you can be able to get permits and across counties where you're working in and you're providing the service? Then we can have a ratified service providers, sort of a directory. Who holds them accountable, especially for a small business, for a startup? When you have a breach of contract by service providers, who holds them accountable? For now, yes, you can take them to court, but we know the court process is quite lengthy and tedious and expensive. So if we can have a way of somebody holding them accountable in the government, then that ensures that you have the service that you want within the timelines that you want. So then that's the issue of the back taxes. How can we ensure linkages between the various government bodies so that there's no duplication of issues? Then getting services, supporting systems. So right now you have the online applications, but even if you do the online application, you have to follow it physically by going into the offices. That means, yes, the online is there, but you still have to do the physical intervention. So can we ensure that we have supporting systems and we reduce those bureaucracies along the way, the tussles that are between county government and NMS in the case of Nairobi, can they be reduced to ensure that there is seamless service provision to the sector? Then the issue of being centralized. So you have very many licenses that are, so you move from one office to the other. So can we have a centralized way of getting all the services that you need in the construction sector? And then regarding the housing agenda in the Big Four, the funds, the budgets that have been put out there, can the revolving fund be channeled to certain banks, and the constructors then can have access to that fund at a very subsidized interest rate? So whatever budget is there, let it be put as a revolving fund, channeled to the banks, and then people have access to that at a very subsidized rate. To the research institution, business school, can we look at having re-emerging technology that are eco-friendly and reduce costs, such as panels? So ensuring that we have up-to-date technology in the construction space. The second one is having qualified trainees who are ready to hit the ground running when they come to the job market. Currently, we have to sort of retrain these graduates. That takes a bit of time and money as well. And so it takes about a year or so before you can bring them up to speed with the market issues that are going. So can we ensure that the trainees, the graduates, especially on the technical side, they are market ready? Then equip students with both technical and business skills. So besides the technical, the engineering kind of a thing, can they ensure they are business savvy even as they come to the business environment and to the market? Then also the business school and the research institution, can they drive policy discussion around the sector? So in terms of favorable policies that can support the SMEs in this sector. On the bank CEO, its gratitude regarding the restructuring of loans is to ask that you continue listening and supporting the SMEs and restructure those loans, especially during this COVID season. Then financing is quite tight for startups with stringent requirements. So hence, even if, yes, you can be able to access the banks, then the requirements are so stringent such that if you are a startup, you can't take up big projects. You can only take up small projects, and as such, because of the stringent requirements that are there. So issues to do with LPO financing, how can we ensure this is happening? Somebody mentioned that there's a country where you have a construction bank. So a bank that is very specific towards financing construction. So if it is possible to have that in Kenya, so that there's a very clear focus on the construction by the banking sector. So those were the discussions, and thank you so much, Martin.
Thank you, Eda. That was very, very detailed and elaborate, and in part, it may be because also the Big Four agenda specifically touches on issues of housing. Thank you for those insights. Next, Caroline, I don't know who we have ready. I've seen several names. Ben Mwarania from Hospitality.
Yes, I'm ready, Martin.
Go ahead, Ben.
Thank you, Martin, and all the participants. We had an interesting discussion in the hospitality sector. It's a wide one, and some of the issues which we came up with in regard to challenges is that, of course, the hospitality industry is a common knowledge that we have suffered heavily because our businesses, most of them virtually went to the closure, and if not collapse. They have started opening up under the COVID licensing regime, which is very strict. So one of the other challenges is about staffing, because we found ourselves with the staff who we were not able to sustain, and therefore there were mass layoffs and reduced pay scales, which the industry is struggling to see how to pay with the reduced cash flows. Cash flow challenges have been real, and that's where the banks have played a critical role in the survival of industry, our industry, which was borrowing for one thing or the other. The COVID-related expenses have also been played a very big impact on the industry, and the reason is because the new regime calls for social distancing. The tables in the restaurants have to be spread wide. You can't sell alcohol in some of the sector players, and these have been singly had a very serious impact on the industry. However, in terms of opportunities, is that being entrepreneurs, everyone is looking for a way to resume operations or remold our operations to fit the new circumstances. And these strategies include being able to do things outside what you were normally doing before. Like, for example, in hotels now supplying to customers, unlike the previous situation where you were expecting customers to come in. There's a lot more vibrance now in the social media in terms of trying to reach out to customers and assure them that they still can utilize the facilities of the industry without fear of contracting the disease. Because then people, being an hospitality industry, people want to feel that they can still be able to enjoy themselves without being impacted negatively. So technology is also playing a very critical role there. Incentives to customers in terms of what we're able to give, whether in terms of reduced rates of pay, what you have to pay for the services, or other opportunities of what you will get on top of what you would normally get from your normal situation. We are building synergies. This industry has come to understand that the kind of mentality of individuals surviving on their own is no longer tenable, and we are seeing a lot more want in terms of what would previously be referred to as competitors are doing, and that is also bringing in new opportunities. And obviously, the industry is looking for new customer bases rather. Like, for example, now in terms of hotels who are relying on tourists, they are looking into ways of exciting the local market so that they can be able to come in and be served by the industry, and therefore the industry makes some money. Now, if this industry at the president here, if we bump into the president today, we would be asking about the stimulus package, which has been talked about a lot. Where is this stimulus package? How do we access this stimulus package? Because it's something which has been talked a lot, but a lot of players do not understand what it is. The other issue which needs to be looked into is taxes. We'll be telling the president these taxes are killing the industry at this point in time when we are paying in absolutely for everything, whether it's VAT on the services, because then what it does is a markup on top of our prices, and it is completely removing us from being able to be competitive. Catering levy, which now is a tourism levy, again, that one is much higher for the industry than the rest of the other payers, and that is an area which needs to be looked into, including the licenses that we still have got. Licenses, some already again are being introduced, like when we had to have the COVID-19 license by the county government, and now the national government is asking for another license. Apparently, is something which needs to be looked into. Right, our banks, we keep on meeting them because it's something which we can't do without, and one of the things is to say thank you for the moratorium. And we would like to look at that going forward up to where it's reasonable for us when we start now, as we have started operating at different levels, for us to be able to be cushioned as they are cushioning us. That's a big thank you for the bank. The other item is the banks need to be a little bit more flexible in terms of the operational loans, because we died literally, and we are trying to come back. And we don't have the financial muscle, many of us, to be able to come back on our own. Banks need to be sensitive to that, and I think it has been mentioned already. And the challenge is that it can't be that the bank will ask for the normal collaterals. They are no longer there. And it's maybe a scheme or coming up with schemes which will make sense so that we are able to get a bit of cash to come back into operation. The other thing is that as we come back into operation, we'll be making money. It will not be like for those who have got loans already. They will need individual tailored strategies, so that a bank is speaking to individuals, obviously, so that now those who are making a little money, their loans are restructured accordingly, so that now we also do not want to believe that the banks are charity givers. They are also in business, and therefore it's just structuring something which is affordable, so that now there is a partnership going forward as we see how we improve on that. The interest rates also, in some cases, are a little bit on the higher side, and that's an area where the banks need to be sensitive, so that they lower them for us to be able to afford to come back into operation. Deans of universities, business school, is to try to orient the business thinking in academia to be influenced by business as much as possible. I think I can see Strathmore, they are trying in that regard. And so what we were saying is that let the programs be driven by the consumer. Unlike where the universities sit back and structure curricula and then roll them out without kind of asking, is this what the industry requires? And especially at this time, point in time, under the COVID new normal, universities can play a very critical role in kind of reinventing what business can be able to jump into and the bandwagon and drive ourselves into success. I think that's basically what we had, Martin.
Yes, thank you very much, Ben. A lot of insights there and very pertinent for the hospitality sector in general. Next, I'll invite tourism, if we have Joshua ready. And then just in terms of time check, we had structured so that we have 4 or 5 minutes per participant, and we were to have started at 9:50. We were to do a Q&A between 10:30 and 11. But given the structure, if I'm allowed just some flexibility, I'll request the next group, since we still have to go through about 6 or 7 groups, to try and just limit to the highlights. The session is recorded. We have rapporteurs. We hope we can engage with you moving forward. And then what I'll request, those who will be delivering closing remarks, as well as Professor Kiraka, which we've scheduled for the last 30 minutes. You can take into account a lot of these things you're hearing. And as you make your closing remarks for Madam Anne Motahi, who will go last, Dr. George Njenga on behalf of Strathmore Business School, and Bwana Tyrus on behalf of NCBA, they're not directed to you as organizations, but you on behalf of the sector. So hopefully you can take what the SMEs are sharing, and collectively we can figure out how to act on this. So from tourism, Joshua, do we have Joshua ready? If not, we could look at Wanjiro Agribusiness, Wanjiro Kibe. And if not, we could look at trade, Dennis Okore. Any of those three ready?
I am ready.
Go
Dennis
ahead,
Okore.
Dennis. Yes, go ahead, Dennis.
Yes, so our group, we were handling trade. One of the, in terms of challenges, the disrupted supply chain. This is especially for SMEs who are in the export and import. This has affected the clearing and forwarding mechanisms at the points of entry, and by so doing, the SMEs lack sufficient supplies for their clients. Another problem has been the issue of sustainability. SMEs having capacity to be able to make the right decisions, either to pivot, to scale down, or even to stop doing business altogether. And this has also made doing business a bit complex. The other challenge has been the issue of credit referencing. This has affected some SMEs in terms of how they can go about their businesses, because they are still listed, and this continued to put the burden of risk on their shoulders, and they are not able to trade effectively. In terms of the sectors, we also looked at some opportunities which are there, and we had a very good case study from our group about an SME who is in the value chain of agribusiness. But overall, we looked at agribusiness being a potential area in terms of a sector where there are opportunities, and this particularly is because people are at home, but also the emergent technologies which are supporting farm to home deliveries, and this kind of has created a new opportunity and a new frontier. But also people will continue eating, whether they are sick, whether they are alive. So this is something that is we saw as an opportunity. Then we also look at the banking. There's need to reimagine banking, and this is a message that goes to the leadership of the banks. And we, in our group, we cited an example of a bank which used to be called the Chase Bank, as a bank that had really modeled itself from brand, from service, to be a real SME bank. And
I'm just confirming the issue is not on my end. Can we hear Dennis, or did we lose Dennis? Professor Kiraka?
We might have lost Dennis.
Okay, yeah, Tyrus, I think we lost Dennis.
Yeah.
Dennis, are you still there? Okay. We'll come back to Dennis. He had just spoken about the issues of banking and branding and positioning. So Dennis, will come back to you. In the meantime, do we have tourism?
Agribusiness. I can do agribusiness.
Go ahead, Wanjiro, agribusiness.
Yes, this is Wanjiro Kibe. I want to look at agribusiness. In our team, we went through a number of challenges, and given time, I'll be very brief, although I'll cover all of them. The first challenge we had was for uncertified seeds. In agribusiness, we don't have certified seeds, and if given the cost of certification of those seeds, companies do not do that. So farmers end up just getting seeds anywhere, and if you then do get access to that, they are very expensive. We also have food safety measures that are very expensive to the entrepreneur. And we have the challenges of not having availability of extension officers who are actually there, but most farmers do not know about them, or agribusiness people. And another challenge is the high cost of licenses, and even if you want to do any value addition, it becomes very expensive for the manufacturer, for the farmer who want to do that little value addition. The other challenge is about financing and technology, especially to the youthful entrepreneur, agribusiness person. They are not able to access financing, and they don't have access to the technology that will then make their business easy. The other challenge is about policy formulation. The youth are not involved in the policy formulation, and even implementation is not well done. So we find that their thoughts and what actually makes them tick is usually left out in those in the policies that have been formulated. And also another challenge in the agribusiness is the seasonality of the business, which then affects the production. What would we be looking for the president to do? Would be looking at the government for funding, first form of funding for the finance to be given to the seed company so that they are able to have certified seeds. And so that gives accessibility to the farmers. So when we are then planting, we are planting the approved seeds. And also that funding comes in to them giving guarantees, the government guaranteeing farmers when it comes to funding, especially for those who then don't have security. They cannot be able to get the finance from banks, so the government will come in and fund. The government will also come in and fund the groups, academic groups or groups of farmers that then need to come and sit together and discuss their issues. We need funding through the counties, through the extension officers and the like. The government also needs to give information about who is the extension officer and where can they be found. Because these extension officers that are there to support the farmers are nowhere to be seen. And even most farmers don't know that they exist. And the government should also involve the youth when it comes to the formulation of the policies and the formulation of policies, so that they can also know what the youth need and what touches the heart of the youth. And more so, we have policies that are very good that have been formulated by the government, but implementation has not been done. So what would we then want to tell Mr. President? That implementation should be taken to the end so that these policies then benefit the farmer and everybody else who is involved in that. When it comes to taxes, the cost of agribusiness can be reduced by reducing the cost of licenses and zero rating some of the issues, some of the taxes that are levied on the agribusiness sector. When it comes to even wanting to do value addition, like making avocado oil or pressing canola oil, when you import that machinery, the government introduced tax just the other day in June. So that also increases the cost of production on value addition for agribusiness. As for the bank, what do we want to tell the CEO of the bank? They need to be considerate when it comes to interest, to reduce the interest and even be able to not to have to charge interest monthly, such that they can structure. Why? Because this business is seasonal. We need a facility that is tailor-made to this agribusiness customer. If we are harvesting in June and we are being asked to make our repayments in June, we have not even sold. We don't even have proper access to those markets at that time. So the bank should tailor-make the facilities or the product they give to the agribusiness to suit these seasons. Over and above that, be accessible. We have relationship managers in the bank. You have to go to the bank or they'll only come when they're available. What are we looking for? A platform that the agribusiness customer or entrepreneur can be able to get in and even talk, explain to the relationship manager, like these Zoom meetings that we have. Accessibility to funding. Most of us who then don't have security cannot be able to be funded by banks. What does that mean? Because we don't have, we cannot be able to secure. And the bank should be flexible enough to be able to then take our crops as security. In most cases, banks will come and say, no, how sure are we that the crop will be harvested? But I believe there's a facility that can be made to that. And also be able to finance the agribusiness customer as a group. If you are doing potato farming or you're doing wheat farming, that group of farmers should be able to come together and be funded as a group by the bank. For the dean, what are we looking at? We're looking at the dean of Strathmore to give us, as agribusiness people, information on how do we get certified. for food safety, to come up with a tool that can make it easy for any agribusiness to be able to tick, what have I done? What is compliance? How do you define compliance? How do I then apply for that? And how do I make sure that I am vetted and certified? So the Strathmore Business School can come up with that kind of tool that explains that, and even engage more on research works that touch on agribusiness. And more so, to be able to release the research findings to we agribusiness customers so that it can be beneficial, not to have research done and then it's just locked away. And for all of them, the government, the bank, and the dean, they should synergize their communication. They should talk in one voice, such that whatever the government says and whatever the bank says and the dean is the same. So that we don't have information coming from all over and in different form of information. And this then will enable us as agribusiness to be able to be doing the same things. If it is accessibility, can we have our soils tested? Can the government be able to give us a place where we can take our soil to be tested without necessarily paying so much, so that whatever certified seeds they give us, then we know they're the correct seeds for that area. When that is done, then we shall be able to be successful. Thank you very much.
Thank you very much, Wanjiro. Those were quite a number of useful insights, and they cut across in the context of agribusiness. Dennis will bring you back in. I just wanted to bring to our collective attention, it's now 10:41 a.m. 11 a.m. is when we'll need to do the closing remarks. So just to make sure we incorporate everything, I'll request you to limit to just your 4 most pressing issues for the remaining sectors. And what I'll request of the dean, I'll request of the bank, and I'll request of government is that even if we don't get to hear everything in detail here, could we find out other ways that in our reports we can share all that with you? Dennis, I'll just give you 2 minutes to wrap up what you had not been able to cover. You are talking about a bank that was useful to SMEs. Just 2 minutes, squeeze in as much as you can in that window. Go ahead, Dennis.
Yeah, thank you very much. I'll use my best of my time. So just mention in a group, there was a case study. There's a mention of Chase Bank as a bank which was heading in the right direction in terms of engaging with the SMEs and also listening to them. The other thing that came up in our group was the issue of the interest rates that are being charged by the bank. This is a message to the banking sector too, that in as much as there's been some effort that has been made in this direction, they still need room to do more for the banks, especially around the loans. Then the other thing is to KRA, especially around tax incentives. There's also a lot that KRA can do, but even when they have given tax incentives, there's still a lot of bureaucracy that really hampers the good work they have done. So that needs to also be checked so that the processes are easier. Then also to the government, there needs to be a real a concerted effort in terms of representation of SMEs issues, especially at the advocacy and lobbying level. SMEs feel like the big players, the big corporates, and the big business are the issues have been well articulated, but the SMEs, we don't have one body that we can rely on, that these people, when they normally talk, they'll always talk about SME issues. To the academic, the dean of the academic, the business schools, one is to do with the capacity building around risk, to increase and deepen the curriculum around risk, so that in future such cases like the pandemics can be better handled. Then other thing is to support curriculum that will build the capacity of the cottage industry from a skill perspective, but also to support them in market access. Thank you very much.
Thank you very much, Dennis. I believe we have Luis ready to represent for manufacturing.
Yes, I'll be presenting on manufacturing.
Good.
For the challenges, we had unstable business environment. The business environment keeps on changing from the economic and from a political stand view. We also had poor policies. For example, most of the policies that have been set up have not been updated or even enforced or adapted. For example, policies such as water policies, cheap water policies has never been updated, with most people around Kenya not even having water or electricity. And then we also have certification problems. For example, getting certification from KEBS has been very difficult, with most of them requiring most of them having so many requirements, so that the manufacturers can get certification. We also have automation problems. We have poor automation in Kenya as a country, and this reduces our ability to add value or diversify as an industry. And our opportunities, we also had an automation opportunity, because if we are able to automate our manufacturing sector, we can be able to add value and diversify, which can also be transferred to the cost, meaning that we'll be able to sell our products at a higher cost. Our advice to the president will be engage with stakeholders before setting up policies and taxes. This because the stakeholders know what they go through when they are manufacturing their products. For example, there's this new tax, digital service tax, that is going to be enacted from next year, where the business people will be required to pay a tax whenever they sell anything online, which might affect most SMEs. We'll also advise the president to increase exports and decrease the number of imports. This will create the imports will create employment within the country, because all our products will be created by our industries, ensuring that people get employment. The president can also subsidize costs such as power, and assist in controlling power outages, because without power, we cannot be able to produce goods and services. For the banks, we'll advise the banks to form relationships with SMEs, in that banks can give loans to SMEs and remove the loans from the profits that are generated by SMEs. The banks can also make it easier for SMEs to gain loans. They can also be more humane to the SMEs, in that when an SME does not pay their loans, they can be given additional time to be able to pay the loans. And to the dean, I will ask the dean to continue to run programs on coaching students and businesses to be able to run their businesses professionally, and to engage with other business in terms of contracts and taxation and other things. Yeah, that was all I had.
Thank you very much for that on behalf of manufacturing, and I'm delighted to see some of our students are actually part of this conversation. He goes by Louis. I also know him as, I believe it's Bradley, in our BCom program. Dennis before from our Masters in Public Policy Management program, but now running a network of innovators. So it's good to hear your voices. Tourism, Joshua. And Joshua, we are at 10:49, so just 3 minutes. 2 to 3 minutes each, so that 11 sharp we make the transition. Joshua, are you ready? If not retail, Patricia. If not health, Barnabas.
Okay, I'm ready.
Go ahead, Patricia. Just 2-3 minutes.
Okay, super. Yeah, quick. Of course, the retail sector was adversely affected by the COVID season. People were not spending money on non-essential goods. So anybody who was in a non-essential sector was adversely affected in terms of income and cash flows. This also affected, of course, stock. If you had taken in stock, you're not able to offload the stock, so you're stuck with that, not able to pay rent. High rent in retail spaces was a big issue and a big challenge for SMEs in the retail space. How to handle our employees, what do you do with no income coming in, no sales coming in, nobody walking into your shop? How do you change employment contracts? That was a real challenge. And even the ability to afford redundancies obviously became an issue. Opportunities, of course, in retail is online sales. It's a great opportunity. People are able to spend more time online, build retail websites, which increases the hours of selling to 24 hours rather than just during the working hours in the malls, etc. Of course, embracing other forms of finance, of payments, including using your credit cards, etc. So that has been a great opportunity, which opens up to new markets and, of course, new business models for the entrepreneur, and embracing technology, which has become key. And I think some of these models, even post-COVID, will continue to be used. As we go into, one of the conversations that came up about was the challenges, especially for people who are retailing across counties. The cost of doing business is extremely expensive. If you're trading within one county to another, all those licenses that you have to get is a problem for the retail sector. So this would be definitely some of the conversations we would have if we sat at the table with the president. How can counties speak more to each other? Maybe to highlight these particular issues. If we have a place at the table when policies are being made, then we can highlight our challenges and our issues. Corruption. Of course, in this retail space, we could not only collect taxes in the form of VAT and turnover taxes. So, if you add the cost of doing business, when you put in the cost of corruption, getting your licenses, etc., I think all these roadblocks kind of like lend themselves to a corrupt business environment. And that was in the agenda. I think it was talked about at least by 3 or 4 business people. And of course, then there's no incentive for us to pay our taxes if we know that when we're paying our taxes, the money is going to be then misused and misspent. So there's no incentive for us to actually pay, and that's when you find people doing underhand business. Speaking to the deans, we need more courses that are more hands-on courses, including things like TVETs, or what was known as the polytechnics. We're being shown that we need multiple skill sets in any environment that you're in, and certainly TVET would help in other areas other than just classroom learning, but more of skill sets that are needed in a wide variety of businesses. And I think that would be big. Banks and probably government as well. SME recovery funds. Many countries have put in COVID recovery funds that have helped businesses in retail with the challenges that we've heard about, dead stock, etc., and retaining of staff, being able to pay rent. I think this is something that needs to be factored into what are they called? Financial institutions. Certainly recovery funds for retail businesses are a must. And then, of course, conversations with the middle. We find that there's a lot of conversations at high level with the large organizations and with the micro organizations, but you find the missing middle, which is the SME sector, which is somehow the conversations are lacking in that area. And we would like more and more people within the middle section of SMEs in retail to have a seat at the table. I think I have covered everything. Thank you.
Thank you very much, Patricia, for that eloquent presentation on behalf of retail. Tourism, Joshua, SME ecosystem.
Yes.
Yeah, go ahead.
Yes, I'm ready. Okay. Unfortunately, I missed part of the discussion on tourism, and maybe my moderator can chip in on any areas which I'll have missed out. In terms of challenges, the immediate thing we faced was the cancellation of bookings. That happened immediately in March when the first case of coronavirus was announced. And getting back these cancelled bookings is being a challenge. The other challenge we are experiencing is the travel insurance. Most tourists traveling to Kenya and indeed Africa at large require travel insurance. Some of the actually most of the insurance companies in the source markets are not able to provide that. So that is making the potential tourists to think twice before traveling. Then there's the issue of testing. Most countries require, and Kenya is included, require the COVID-free certificate, which has to be valid, I think, 72 or 96 hours before traveling. So by the time somebody goes for testing and actually gets the results, the 96 hours has elapsed and they end up missing their flights. So that's another challenge we are also experiencing. The other one is the potential tourists are also worried about our health infrastructure. You know, should they fall ill while they're here? Do we have the infrastructure to, you know, have them attended to? So that is another challenge we are experiencing. In terms of opportunities, online marketing campaign has really picked up, especially on the domestic market, and this one is working very well. Probably this would also be a very good time, especially for the counties, to step up and let us know the kind of tourism products they have in the area, which can enable us to promote the domestic tourism, which has really picked up of late, and which is something we really need to look at very keenly as the industry players. And then, apart from looking at the domestic tourism here in Kenya, I think we need to expound our borders and look at Tanzania, look at Uganda, look at Rwanda, and look at Southern Africa. This would make us less independent, less dependent on the international markets. And then for the president, two issues. One, tourism require a peaceful environment. As it is right now, it seems like the political drumbeats have already started beating, and this can be scary going into the election period. So if this can be toned down while we work on the other recovery areas, that will be really appreciated. And then there was a stimulus package which was indicated to be given to the hospitality industry. Now, unfortunately, from what we understand is that this stimulus package is going to be given to only hotels and not the tour operators. Now, tour operators play a big role in the hospitality industry. So whereas the hotels will be able to refurbish their properties with the stimulus package, it's going to leave the tour operators, you know, high and dry, and might not be able to bounce back immediately to be able to fill up the hotels. So that's something which needs to be looked at as well. For the banks, we would, I mean, at this point has been, I think, beaten to death. Would require the assistance in terms of lower interest rates for loans and restructuring, bearing in mind that the tourism industry usually takes a very, very long time to recover. It might not be like the other industries, which might recover in a month or two. So we would need their assistance in that area. For the dean, would propose that they look at programs which are more industry specific, and especially for the entrepreneurs. That's all I was able to capture before I got logged off. So if the moderator has got something else to chip in, she can go ahead and do that. Thank you.
Yeah, thank you, Joshua. That's actually quite comprehensive. And if there are any points, we'll allow the moderator to provide some additional insights just so that we can accommodate the other two groups. You can have some details in the chat. We can hear from health and then we close up with SME. Based on time, you only have 30 seconds each. I'll request of Dr. Njenga, Tyrus, and Madam Ann. We just hear from these two. We'll figure out how to adjust. We may run over by maybe 4 minutes. Barnabas, are you ready, or Joy? And if neither of you is available, your respective moderators. So we had for SME, Rosemary. Are you able just to give 1 or 2 points? If Rosemary Okello, if you're there. And then for health, we had Roslyn. Are you able to give 1 or 2 points? If not, we'll incorporate those, then I can.
Joy is saying
Okay,
she's
yeah,
there.
Joy is there. Go ahead, Joy. Go ahead, Joy. Joy Kula. There might be an issue with Joy's sound. And Joy, if I recognize the name, has an illustrious background. Joy, are you able to speak? Probably not. Joy, I believe, might be
Yes, I'm here.
Okay, good, in the hospital. Go ahead, Joy.
Joy is going to speak on the ecosystem. Sorry. Yeah, this is Rosemary.
Okay, Joy, go ahead.
All right, thank you. I'll make it very brief because of the time constraint. So in terms of challenges, what came out most was on the fragmented support to SMEs. There are a lot of initiatives that are ongoing to support SMEs, but there seems to be dissemination challenges in how the information is being disseminated. And so there's need to look at how does this information get cascaded down, right down to the member boga, who needs to benefit from the information. And then we also saw lack of policies geared to support SMEs to thrive in their business, lack of capacity building targeting the management practices of SMEs, including human resource and internal operations. Fragmentation of laws and multiplicity of regulations sometimes can be very confusing to the SMEs. So that came up as part of the key challenges. In terms of opportunities, there's the ecosystem approach to work with micro and small enterprises and link them to the larger organizations. Presence of good opportunities such as Africa Partner Pool was mentioned that allows coordinated tendering in the SME space. Trainings to be done as a group, allowing for pooling, facility support as well. And then the opportunity also for SME support hubs like they have in Japan, Dubai, sort of giving like a one-stop shop for SMEs who need to get information, market access, financial support, provide them with that one-stop facility. Redefining business models was also mentioned as an opportunity, and then looking at sustainability programs. If we were to have an address to the president, key address would be, what would say to Mr. President is, SMEs are really the backbone and drivers of economic growth. We make up 90% of businesses in Kenya and employ more than 80% of the working population in Kenya. So we are playing a very critical role in the economic growth of the country. The efforts of the president and his government to promote SME competitiveness and provide targeted solutions for inclusive growth is very key in helping the country achieve its development objectives by creating more jobs, strengthening sectors, and improving livelihoods. There was also the issues of regulators that take a long time to respond. One of the examples was given was with KEBS, the product certification delays, which has caused products to go bad in storage. SMEs lack of info, I think I've mentioned that, in the space of also digital lending, and how can the government act as a regulator to support SMEs not get exploited. Breakdown of communication costs to SMEs, let me just jump in. And then putting policy in place to make it mandatory to have training sectors replicate training like the MasterCard Foundation training model. To the CEO, I think what came out is, I think SMEs are tired of carrots being dangled in their faces in terms of financial access. So how can they really come up with programs that are making SMEs bankable or credit ready? Even if an SME comes to you and they're not deemed to be ready to receive the financing, what are they doing to support the SME access that finance? There's need to understand the businesses. There was a proposal for sector-based SME facilities. Those in the agriculture sector, can they have specific facilities that they can access in terms of the financing? Access for startups, can banks look at how they can support startups, because that financing is not really readily available. And then last to the dean is looking at flagship programs, programs that can be customized towards business skill training, technical assistance, and then also how can we facilitate collaboration between enterprises. between the enterprises that they've trained and business developers. And there was also the need for R&D, just looking at how do we better support the SMEs in the ecosystem. I think that's it in a nutshell. Sorry if I've taken more than the time allocated. Thank you.
Yeah, thank you, Joy. That was quite articulate and reflects some of the issues brought up earlier. Last, Barnabas on behalf of Health. Karibu, Barnabas. Just about 2 minutes. We are running over by 5.
Okay, thank you. So I'll highlight the challenges a bit quick. So there were raised challenges include the limited access to specialized points of care, and most healthcare providers provide primary health services, and there's also issue of health personnel to population ratio as per the WHO standards. Then there's insurance sector challenge, both in the public sector, which include NHIF, and private insurance not paying health care providers on time. And the issue of policy regulation, where some of the conditions from insurance companies are not completely disclosed to their customers. There's also the problem of existing middlemen or brokers in the healthcare provision sectors, especially in the pricing in the supply area, where they inflate prices and they also cause problems with the customers. There's also a challenge of digitization, which has been caused by the increased with the problem of coronavirus. And I think this is an issue that has been raised because healthcare center also mostly engage in contact-based provision of service. And there's also high business requirements and operation environment in terms of licensing for SMEs. And some of the pointers, a solution for them included delivery systems transformation, which include digitization and also insurance policy regulation. There's also issue of tender specialization, where people, for example, who are found in construction sector are not found supplying healthcare materials to the health sector, but specialization. There's also the need to increase the World WHO recommended ratio in the healthcare provision and personnel. There's also a recommendation on licensing and business environment for SMEs to be increased. And lastly, the issue of financing in terms of insurance providers, that NHIF and private insurance providers should pay SMEs and suppliers on time, so that to reduce the issue of credit and problem with banks and financiers. Maybe some of the recommendation to the president of the country is to guide and also push the sector to be more accountable, and also implement crucial policies that push the insurance sector to disclose all their information to customers. And to the Dean of Students, they should drive policy discussion around the sector of health that enhances ethical operations and also good corporate governance. And they should also partner with government institutions to transition students from schools and to the health sector. So basically, that's a summary of everything that we discussed. Thank you.
Excellent, and that marks the end of our presentations. Thank you very much for the breakout groups. A lot of food for thought for the closing remarks by the key sets of speakers. I don't know that we'll be able to contain that in 20 minutes. I wanted to recognize that among the entrepreneurs, you have Zenode, Bionic, 3D Services, DataCare, Japotech, from as far as Uganda. We got that link through John Matogo, who used to be with us at Strathmore. We also have a set of 33 entrepreneurs whom we had a breakout session with the afternoon of the first day, and very, very detailed conversations. I've seen Derek was here among the technology team. We wanted to have all your information on the website. If you go to the exhibition link, we are going to work on that for the coming week, so that anybody who's attended this conference, we endeavor to put up your profile on the site there for networking purposes. And just before I hand over to the the sets of closing remarks, I believe we are going to start with Tyrus. I wanted to recognize the team that's made this possible, both moderators drawn from our faculty administrative team and our student body for rapporteurs, manufacturing, Naomi Rakeli, retail, Ruth Raudat, hospitality, John Innocent, education, John Elvis, tourism, Stella Grace, health, Rosalind Barnabas, construction, Eda Fadili, agribusiness, Lucy Catherine, traders, myself, Martin Husna, tech startups, Helen Ian, and SME ecosystem, Rosemary and Diana. Thank you very much. For our students, we'll put your profiles up there. You may end up getting internships with some of the actors that are involved here. We can't thank you enough for making this possible. And for those who are also working behind the scenes, brands and others, asanteni sana. With that, Professor, why don't I invite you to moderate this closing portion? Just you help recap maybe in a minute, and then Tyrus, you'll prepare yourself. We'll hear from Dr. Njenga, and then we'll give last word to Madam Anne Motahi, and then I'll just wrap up formally, thanking you all for being part of this amazing week. Professor Kiraka, over to you.
Thanks, Martin. I will not dare or attempt to summarize everything that has been said for the last 2.5 hours. I think it is only fair that we get to the people who have been allocated this session so that we don't overrun our time too much. I know some of the people need to leave. So I would actually request that Tyrus comes on board. And Tyrus, you've heard all the things that people have to say about the bank. Some of the things are on the chat, others are in the presentation. So tell the SMEs what NCBA has in store for them going forward. Thanks, Tyrus.
Thank you, Professor. And wow, I mean, this has been amazing. I'm blown away by the energy. You know, when you think about doing these virtual events, sometimes you wonder, how is it actually going to pull together? And you can feel the energy and there. So I've got 5 comments to make, and I'll try and make them in about 5 or so minutes. The first question of the day, and I forgot to note the gentleman's name, he asked, what do we believe inspires SMEs? And I do want to honor the gentleman by going back, and I hope he's still on the line. My thoughts on that are, number one, I think growth. I don't believe anybody begins an SME with the intention to remain small. And that growth, the drive for scale and relevance, I think is the biggest drivers of SME. And I think that's what really powers our economy. The second thing is, I think, sustainability. Many of the reasons, and I think it was yesterday or today where I read Kenyans, I think, rank #1 in terms of their side hustle prevalence. Why do we do that? I think it's a sustainability, the financial independence that we're looking for, and more importantly, the transference of wealth. A lot of people in our generation grow up in relatively less advantaged situations. And I think that drive to transfer wealth and transcend generations, personally for me, I think is 2 of the big drivers for SMEs. I hope you agree with my thoughts on that. There's been a lot of comments around relevance for sectors. And I do want to just give you a few highlights about some of the things we're doing at NCBA. The education panel, I think, brought up, you know, how can we create structures that are more relevant for that sector? Our asset finance, and you know, NCBA is known as the home of asset finance in Kenya. When we finance schools for buses and transport, one of the innovative things we've done with them is that your repayment is structured to the beginning of your term, or we allow you the flexibility to tell us when do you want to pay. And we do allow quarterly payments rather than insisting on monthly, because we know schools, generally their cash flows are better at the beginning of the term, and then it kind of drops and then there. With distributors and distributor finance, a lot of people may not know that we finance people for as little as 20 or 50,000 shillings for 1 week or 1 month, because they want to buy, for example, our largest client base on that is beer distributors. So we finance people to buy their stock from the beer distributors, sell, and then pay us back for as little as 50,000 shillings. That keeps them going on and on. So don't think of NCBA as just the people who you need to talk to about the large millions. We are financing across the chain, and that is one of our products that we want to expand and aggressively grow. I heard from the agriculture panel, my friend, my old friend Wanjiro Kibe, Dr. Wanjiro, relevance to help, for example, with financing seeds. In Kitale, we have an MOU with the Kenya Seed Company where we finance maize seed farmers and facilitate them to buy the seed, plant, prepare their land, and pay us at the end when when Kenya Seed offtakes their products. So we have piloted programs like this. I think we've got a lot of lessons from it, and are looking forward to expanding this to more sectors that we can create relevant solutions. In the real estate, we've helped them with restructuring. We know people have lost jobs. We know people have lost salaries. The conversation is now shifting to how do we recover? How do you get back on track? Because the restructure was a temporary moratorium. You will need to be supported going forward, and we're having those conversations. What happens next from here is expect to see NCBA being really active in the SME space. We believe strongly in the potential for this segment. We intend to be closer to you as well. You may have heard my group managing director mention that we intend to open more branches, come closer to you so that we can bring our solutions closer and closer to you. I had a lot of comments about cost of borrowing. You know, we don't often appreciate that banks are actually probably your cheaper sources of finance these days. You know, if you think about some of the alternative finance opportunities that are there, they've become actually quite expensive and are drawing the attention of the central bank as a regulator for our industry about, you know, how do we make sense of that? But, you know, what we are very aware of as banks is that the conversation is really about access, about speed, about flexibility, about understanding your business and the structure of your business. And most importantly, the dignity with which we treat. You know, people don't like applying for 20,000 and being told no, you know, so sometimes you do it digitally, even if it's more expensive, because you don't want to feel, you know, 30 pages for 100,000 shillings loan, only to be, you know, 7 weeks later to be told no. We know that when I talked about the distributor finance, it is a mobile based solution that will give you a response within a matter of minutes, and then you know you've got the access or not. I think that's what we need to be talking about, and we are conscious of your feedback around that area. There's a lot of great ideas from all the panels. I look forward to seeing the rapporteurs' summaries of all of that reporting. My team is on the call. They've been taking notes as well, and we've had your feedback. And areas like advice around tax, I think tax came up so often, and I think we need to think about how we can help you understand the tax environment a little bit better. And we look forward to partnering with people who have expertise in that area. One-stop shop for SMEs, I've heard a lot about that. I think that's something we've been considering and we look into. But I also want to say your branch and your RM is our one-stop shop for your advice on SME. And what we're doing with the training that we're offering our relationship managers is that they can, even if they don't know, they know who, where, or from whom to get the information and get it back to you quickly, so that you feel that you're given the capacity. So I want to invite you to go to your branch, talk to the relationship manager or the branch manager. And as I said earlier, as we continue expanding our network and getting closer to you, hopefully that access will become closer to you. I want to finish by making a promise. Professor Kiraka, I think, commented on the chat. A lot of you may not know that this is actually the 8th annual SME conference that Strathmore are running, and it is the 6th that NCBA has been a partner of. I can promise you we will be back. It is a partnership that we believe adds a lot of value to our clients. I want to invite you to, in the conference program, there's some information about the EDP. Please look into it. There is no qualification criteria other than your interest. If you're a customer of NCBA, we do support with a discount that is substantial, 20% of the cost. of that program. And it doesn't ask for a lot of money, and it doesn't ask for a lot of your time. I believe it's a couple of hours once a week for 16 weeks. We know you're busy. And I know the Strathmore team will support you and be very responsive. I believe there is an email address and a contact that you can reach out to, and it will really help build your networks and your knowledge in terms of the way you've structured your business. And we've seen, you heard from some of our clients earlier on today and even last week that have spoken really commendably, and I thank Strathmore for that. So you will see us back. We promise to be, to continue supporting these annual conferences. Some of you may also not know, and Mrs. Motahi may actually comment on this. I think about 2 or 3 years ago, this was the foundation of the Presidential Roundtable on SMEs, if I'm not mistaken. And so we've seen an enduring legacy drive out of this, and we will be back. I think we all have your emails that are registered, and so I'll promise on behalf of the administration team that we will write to you and make sure you're invited next year, so that you do not have to remember, you will get an email. So let me finish by saying thank you. This has been an enjoyable event, really humbled by your positive comments, your active participation, your thoughts and ideas that are passionately looking forward to inspire your greatness, which is what and only thing we want to do at NCBA. Thank you so much for your support, and we look forward to seeing you in future seminars like this one. Thank you so much.
Prof, you're muted.
Thank you very much, Tyrus, and for your input. And I think the SMEs have heard from you, and they will do as you have said. And when they go to the branches, they better find what you have promised. Okay, so let's hear from Dr. George Jenga, our Executive Dean at the Business School. I think in terms of capacity building and what they want to hear from the business, what they want to receive from the business school. So tell us what you have for the SMEs, Dr. Jenga.
You Prof, have everything. It's beautiful to read all the discussions, passionate as entrepreneurs in Kenya are. Tyrus, thank you for being there. Stephen, always together. I am really grateful, very, very grateful to the NCBA team, very especially Anne. I just feel so moved that Anne is here. She has the ear of the president, so don't underestimate her power when she sits in these sessions. Everything you say will go to the president. And sometimes I do wonder how she's to present a workable solution. Ruth and all the team, Edda, Eunice, and our Angela at the top there. I have just been with Angela. I've left her running another meeting, so I doubt she will be here. I just want to say thank you to you. I've looked at the industry and the SME, so I just have 2 or 3 comments to make, and very quickly. And if you don't understand me, Professor Ruth Kiraka will explain it to you outside this conference. All right. So number 1, we have very beautiful but random innovators in Kenya. Point number 2 in that line, randomness creates a lot of work to derive value. Along that line, randomness is not effective for scaling. Number 3, if you try to fight randomness, then you may create a situation where you have a monopoly. In other words, if you have a lot of taxi companies in Nairobi and you unite them to provide a taxi value for tourists, they may want to stop other people from entering the industry. Yet, you somehow need a sort of network. Fourthly, if you don't have a well thought out value chain from end to end, so that you know where you're playing within the value chain, then your work can get lost. For instance, a beautiful hotel in the middle of the Rift Valley, if the taxi from the airport to that hotel is a mess, then the tourists won't come. If the healthcare system in the country and policy is not good, then they won't come. If the airline that is transporting is too expensive, then they won't come. Yet, your hotel is beautiful, the most beautiful thing you've ever seen, the most beautiful landscape. Randomness does not help us be innovative along the value chain. So, for instance, in the entertainment industry, you still see more tourists going to a war zone like Israel than come to Kenya. Why? Because Israel is totally integrated. If there is war, they put in a security element within the value chain. And they convince the customers and the tourists that they will be manned by security vehicles the moment they start their journey from whichever country. We Kenyans are the most innovative people I've ever seen. And let me tell you, I have been in many places. I can't tell you the craziness we have here in this country, but it is random. At SBS, under Professor Ruth Kiraka, Eda Muni, I think it is time we have a network of networks. And together with our colleagues, NCBA and other financing institutions that want to be funding this networking across the entire country, within the counties, we can begin to be a basis for that, to be a network of networks. And that networks of networks can have a place where we harness information, we integrate information, we train along the value chain. The network must be about value provision from end to end. If we don't do that, we will keep being drained right from the beginning. There is a leak in our country, a leak in our minerals, a leak in our agribusiness, a leak in our after harvest seasons, a leak in our ICT, a leak in our intellectual property, our leak in our engineering system. Engineers, top A-level class engineers, you give them Kayole and you start wondering what happened? Where are the geniuses? You have a system of governance in a city council like this that cannot even plan. Yet that person is a genius when you take him or her outside. But we have chaos. 70% of the buildings are a mess. And I will not say about the amenities around them. And if I talk about licensing for business, I go crazy in my head. If we don't speak with one voice to Anne and to the executive president, His Excellency President Uhuru, we have a problem. So, Prof. Ruth Kiraka, we started this presidential thing together with Anne. We were part of it, right at the heart of it. Let's take the dance to a new level. Okay, let's do it. And if it is about money, I have Tyrus and Stephen Gakuya here. Then number two, I finish by saying, which because I don't think I'll reach number three for the sake of time. I am in the SME sector myself because, and many of my staff are, because I always tell them when you go to that class, you better know what you're doing. And part of experience is that. So we would like to integrate this SME network even at the county level. And so we are co-creating that right now with an organization. I'm hoping that we will come up with a reasonable plan of how to co-create centers that deliver value skills. You have asked for skills that deliver knowledge about the value chain, where the value chain is weak, where the value chain needs support. All right. So we want to deliver that across the country. And for that to happen, we have to have partners in every county. We have selected the first 11 or so, 12. But in those counties, we want women entrepreneurs. We want to, how do we get the informal investment groups? We want those centers in the counties to have information. We want to get a network of service providers, of government policy providers like licensing, all in one-stop shop. If Huduma had that service already in every center aimed at value creation along the value chain, then let me tell you, we will do something for ACFTA, the African Continental Free Trade Area. The last thing is, Titus and Stephen, please do something about this thing of the stock exchange, because I think there is value hidden in there. But the more we sit on Nairobi Stock Exchange laws and regulations and policies that try to imitate other economies, we will never resolve our business proposition for our people in Kenya. So how do we go about this? We need to partner to see how we can go in and help Jeffrey there and tell them probably we need to help you resolve this issue of when you have 1 million entrepreneurs, man, we can do great stuff. Let's not be too narrow-minded with our 200,000, SMEs that are picking around 12,000 bob. Let's go for the big thing. And to go for the big thing, we need to network. Let me end there by saying it's so precious to listen to you people. And I hope and pray that we can continue working on this issue, dear Anne, so that we can network our SMEs and to some extent streamline it a little bit, not completely, but streamline the randomness and see the value flow across the entire value chains for the strategies we have. Team, thank you very much, people. I'm so grateful. Martin, rapporteur number 1, and Kina Julius Bibo behind the back there, my professors there, apart from Ruth Kiraka, I see Stella, I see Rosemary there, I see many people, Eunice. I cannot say thank you enough, and all the team from NCBA. Thank you, people, and you attendees. What a precious gift for me and for SBS. Thank you.
Thank you very much, Dr. Jenga. I know we are running a little bit behind time. However, you do not want to miss to listen to Mrs. Anne Mutahi. As Dr. Jenga said, she has the ear of the president. So for the SMEs that are here, please do not leave until you've heard from Madam Anne Mutahi. And I'm not going to spend any time talking much about her and her background. I will just give her the floor to share with us what she has for the SMEs going forward. And they're really looking forward to hearing from you. Madam Anne.
Thank you very much indeed, Professor Kiraka. And I just want to thank all of you for, just a great discussion that we've had today. I was able to listen into, I think, the SME ecosystem. And I think indeed there is a value to different people coming in digitally, because I think the variety and the interaction we had was actually amazing. So I think as I begin, I want to really thank Strathmore for, gracing me with the invitation of giving your closing remarks. Closing remarks is a tricky assignment. You're last, people are tired, and there's a lot that we've actually covered. But I want to say that I'm very, very grateful. I find it a privilege being able to listen to the comments and indeed the great comments, reactions. I also want to actually commend the partnership between Strathmore and NCBA that has spanned over 8 years. And to say that you have contributed immensely to the body of work that has helped to shape the narrative around SMEs. As Tyrus clearly said, out of the 2018 Strathmore and at that time NIC partnership, we were then able to craft the idea of the Presidential Roundtable, which had a ripple effect across many different sectors. Now, usually when we were in these kind of forums, and I heard it again today, we always begin by almost justifying, why are SMEs important? We give out critical data, and one that has been said by you, Ruth, and also was said by the CAS, is that out of the 18 million employees or working force in Kenya, 15 million of them are informal, assuming that informal is equivalent to SMEs. And what we always wonder is that if indeed that is the weight that we have in SMEs, then how is it that probably the response that people are looking for from policy, from the private sector, doesn't actually match that kind of weight? Again, when we look at even the revenue contribution, we talk about 33%. In other areas, they talk about a lot more. Again, I think that's something that we need to interrogate, and I will try and address that later. However, I think what COVID did for all of us, this whole COVID-19 experience, is that it actually highlighted just how important SMEs are to Kenya. I think what we saw here was because of the fact that we had closed borders, we could not bring in imports, the Kenyan businesses rose to the occasion. We found that indeed, because we had almost a protectionist situation where we weren't able to bring in a lot of things, suddenly our SMEs and our closet manufacturers, should I call them that, had a lot of hidden capabilities which had never been utilized due to lack of opportunity. Kenya went into what I call an action research mode, where we discovered and still are discovering that there's so many levels of SMEs with so many capabilities, different levels of sophistication, which do not necessarily always look the way we actually thought we did. I don't need to tell all of you that we were able to do so many different things, from sophisticated PPPs, which people never thought we could do, to even hospital beds. Yes?
We can't see you, we can see the paper with a bit of money there.
Oh my goodness.
Do you want us to see you?
Not able to see me.
No, I think the camera is pointing down to the papers.
Oh, I see. I'm sorry about that. I am sorry about that. How's that?
Not yet, we can't see you. Somehow for the camera is backwards. I think it's not facing you. You need to turn it towards your face. Sorry.
How is that now?
Yes, now we see you.
About that. I'm sorry that we weren't told before. So as I was saying, I was saying, and to conclude, and thank you very much, Professor Jenga, is that I don't need to say the kind of things that we were able to go ahead and actually be able to generate. For instance, even I noticed that our local metal manufacturers were able to even work with vehicles, matatus, to convert them into transporters of fresh goods right across the country. But however, while we saw our key advantages, I think we were also able to see our weaknesses. And what we actually found is that our informality, or should I call it an escape from the authorities, including KRA, was far more damaging than we actually thought. When we looked at what other developing countries were able to do for their SMEs, the question that kept coming up, and I've heard it today, is how come we weren't able to match that kind of response? And I want to say it's because we do not have the data of where our SMEs are. And this is a critical issue that I think we really need to address. What we found is that even though 98% of them are informal, we don't know where they are. We don't know what their needs are. And most of the time, what you'd actually find is that the SMEs who are being, should I say, addressed, or who were able to, respond to solutions, were the former ones, the ones that banks are already in banks, the ones that have their paper. So I think that is something that we really need to actually look at. On the 11th of September, I had the privilege of listening to a lot of the deliberations that were there. And what I noticed is that there's key words that kept coming up. We talked about resilience, we talked about innovation, we talked about intellectual humility, we talked about a drive to excellence. We also looked at the fact that there was a need to contextualize the kind of, should I say, innovations that came up and that we looked at. We talked about how can we offer a coherent and centralized approach to some of the initiatives that we were there. And really what we were really talking about was how could we radically transform the energy that we are seeing into a force that actually is able to actually move this economy and country forward. I think when we summarize all these things, what we'll actually find is that, as probably Professor Jenga said, that it is true that SMEs are the salt of the earth. However, if they are the salt of the earth, we need to ask ourselves, what is it that we need to do? What is the new perspective that we're talking about? Dr. Ruth talked about being intellectually humble, but I think in addition to being intellectually humble, we need to also be intellectually honest and admit that probably we have misread the depth, the reach, and the ability that we have within our borders. As I move to conclude, I want to say that we do need to have new lenses collectively. We do need to look at things, our approaches to SMEs in a totally new way. And what I'd like to actually say is that, that it's time for us, and I keep hearing this throughout the presentations today and even yesterday, it's time for us to have an integrated and effective enterprise development ecosystem. And the question is how are we going to actually make sure that we can ignite, by the conversations that we've had today, by the people who are on this chat and have been, how can we begin to ignite that discussion of what is this integrated, effective enterprise development ecosystem that we actually need to look at? Maybe I'll just give a few suggestions, and I think practicality is required. And when we talk about practicality, it is true that we need to actually be guided by data on SMEs. We don't have sufficient data on SMEs, and that is why, in spite of the fact that there's so many good initiatives throughout the government, through private sector, they somehow always leave the mark. In other words, there's always a larger population that say that they haven't been, they haven't had, or rather they haven't received anything from all these innovations. Therefore, we have to ask ourselves, how is it that we're not able to match our efforts to what is out there? And I believe it's because we don't have sufficient data. And I want to say that we do have the data. Probably we need to look to be a little bit more creative in how we mine that data. For instance, every SME that we know, be it formal or informal, is digitally connected, either through their M-Pesa, on social media. And I think a way of trying to interrogate this data and the patterns that it has will actually unveil a lot of information that we have. I think it will help us to look into the age brackets, into their locations, into their habits, their trends, and their value chains. Juliana Rotich mentioned that there is a startup bill that is now in the National Assembly. That is one of the areas that we can also look at, given the fact that we're a very young nation. How do we help our young workforce to actually begin having maybe a startup registration that caters for the fact that they're still in the mode of trying, and that indeed that they need a little bit more time before they're actually introduced into what I call the formal system of trying to pay fees and taxes. I think that that is something that we can actually look at, and I'm glad to hear that the startup bill has actually progressed and is in the National Assembly. I think our policies do need a level of protectionism, and I think we need to say that. We saw that because there was, should I say, an unnatural protectionism, we found our manufacturers, our SMEs were able to rise to the occasion. So I think we should be bold enough to actually begin to lobby that. What I find is that when there's lobby groups, people don't want to say that. They feel that, we're a liberalized system, but we need to protect and to actually develop some of our SMEs. I'd just like to give you an example of just some of the, I think, the innovations. Recently, when there was a Mitumba ban, we as the SME advisory decided, let's actually take a deep dive and really look at the SME sector, the Mitumba section. And what we found is, as you know, the Mitumba is part of a huge international second-hand trade. And we realized that because of the policies that we have here in Kenya around that particular industry, we have actually lost opportunities for employment. We have lost an opportunity for actually moving to local manufacturing of our own textiles. And it's for one little reason. We bring in Mitumba when it's actually been refined and already been selected and chosen. Were we to actually change our policy and bring in Mitumba as a raw material, do you know we would be able to have Kenyan improvements on it? We'll be able to employ a lot of people to be able to actually sort it and perhaps begin the journey to actually having a local and thriving apparel sector. So I think when I talk about new perspectives, we need to challenge ourselves and admit that we have looked at a lot of things the wrong way. And I think this COVID-19 episode has given us the opportunity to do so. Training has been a byword for many years, and I hear every SME forum talking about training. But we found that we could even train digitally. I think one of the things that we've discovered is just how digital we are as Kenyans. You've seen people who would never have gone to church on their phones going to church now. We have seen children having to learn through digital channels. I really believe even training, apt and relevant training can also be done digitally. So I think this is an area that Strathmore as an institution of higher learning can begin to put the roles, start rolling the ball into finding how can businesses actually begin teaching themselves digitally. I know Safaricom is working on that with their new business app. They're also working on a digital training course, which will help a lot of the SMEs expand their management and indeed their other skills. I think another thing, just talking about policy and talking about the changes that we need around there, is also trying to encourage linkages that are there. But when we talk about encouraging linkages, can we do it with incentives? Can we say that if indeed you do buy Kenya, what is it that you're going to actually get from that? You know, those are the kind of discussions that we need to have in the kind of forum that that has been mentioned here continuously. I think the other thing that we need to really appreciate is that Kenyans do not act as the lone wolf. That is not our nature. We tend to grow because we are together, because we are in associations, because we are in circles, because we are in groups, because we are in the networks that have been mentioned here. And I really think that there's no surprise that Kenya is actually home to the largest number of well-developed circles right across Africa. When you look at the business communities, and many of them attended this forum, we look at people like ASEC, we look at SME founders, we look at Kayana that are also here, we look at the Africa Partner Pool and many others that are represented here today. What you find is that these are communities that give space for growth and tremendous innovation. Again, from a policy perspective, what can we do to strengthen those communities? Can we agree that Kenyans prefer working together as opposed to individually, and see how can we find these communities to be something that can be legally given some legal status, given some tax incentive status, and also become a hub for market linkages and training. After the inaugural SME Roundtable, which I think has been mentioned here and was hosted ably by both Strathmore and NIC, there was a comment that came from one of the groups, and I think it was a group from Gikomba. And what they said is that for the very first time, we feel as if government has heard us today. I think the important thing is, out of this forum that we've had today, about after the many voices that have been able to voice a lot of their new learnings and their new challenges, how can we form a network together to approach the government and to say that we want an integrated approach? If you look at, for instance, a country of South Africa, where we can probably take some lessons, what you find is that they actually have a state department for small businesses. Perhaps that is what we need to come out with as a key outcome of this very important forum. How can we escalate to the government that, you know, we don't want the silo approach that has been, I think, very common to SMEs. We now want an integrated approach that will handle all the many challenges that are there across SMEs. We want an integrated approach that will ensure that SMEs take center stage in terms of a new economy in Kenya. So I think with those very few remarks, I really want to encourage all of us not to drop the ball from today, but to find a way of continuing to voice our views. You know, there were so many people that were on the two-day forum. I think probably even more than had we had an actual physical setting. And I think that body of people there is enough to activate change, to ignite change, to continue being a voice. So I think with those very few remarks, I really want to thank Strathmore for your unwavering devotion and commitment to SMEs. You do them in so many different ways. We work with you in very many different areas. And I just want to say that you do continue to be the bedrock of innovation, I think, in terms of academia meeting private sector, academia meeting the SMEs, and in many other areas. And I really believe that we should continue the conversation, and I'm hoping that the report that will come out of this will be something we can go and present to the government, maybe through CS Betty initially, but indeed to even the highest level. So thank you very much, and may God bless you all. Thank you.
Thank you very much, Anne. And I can see our dean is clapping, and I'm doing the same. The challenge of this online platform is that we're not able to clap properly the way we would have if we were physically together. But thank you very much, Anne Mutahi, for your comments and for giving us those concluding remarks to our conference. I am not going to say much more. What I'm going to say is that we've really come full circle. When we started last week, we were talking about what it means to be resilient, what it means to be excellent, and what it means to run our businesses in these uncertain times. And I think from the conversations we had last Thursday and what we have had today, it is clear that we have some very tangible things that we have done and can do. We talked about challenges, but we've also talked about opportunities. And the entrepreneurs in our breakout sessions, we really delved a lot into the opportunities that we see. And more importantly, we also identified how we believe that government, private sector, financial institutions, and academia can support the SMEs. What I can promise coming out of this is that it is true. One, we're going to document everything. Thanks to this technology, we have recorded all the sessions and all the breakouts. So we'll be able to record everything. We'll be able to put a clear message to our cabinet secretary, and hopefully it will also get to the ear of the president. As the people planning, who have planned this conference, we'll also continue to get together with the NCBA and government to identify key tangible interventions based on the feedback that we have received from you. So thank you all so much for giving us your time and for giving us your input. There has been a lot of comments on the chat. People have shared their contact information. People are asking, how do we continue staying networked? Fortunately, we have all your contact information for everybody who registered. And so we'll be able to share it, and we're going to create this network that we hope to continue to build and to engage and have conversations with the SMEs. So thank you all once again for all your input and for participating so actively. Over to you, Martin, for sending us home.
Sure. Thank you very much, Professor Keraka. Thank you to all the speakers for that triple helix of government, industry, and academia responding to the entrepreneurs. And also thank you to, in their absence, Metropole. They covered the entire proceedings last week live, and K24 for covering the CS's speech also live. So we reached a much larger audience. For all those who are engaging behind the scenes, you know yourselves, you've been integral in this throughout. We really appreciate and thank you. As we close, I just want to leave you with a challenge. Reach out to an entrepreneur, an SME who did not make it to this event, and ask them to visit conference.strathmore.edu. All the video recordings from last week, this week are present. All the materials will be present. We'll keep updating. For all the businesses that sent their materials, we'll also profile you in the exhibition section of the site. With that, thank you for taking part in this conference. It's now 11:52 a.m. We've run over exactly by 22 minutes, just slightly 2 minutes over last week's. And thank you for bearing with that slight delay. We bring this conference to a close. Dr. Njenga, nitakuuliza waambia watu kwa heri. Along with Tyrus, you can turn on your microphones. And Madam Anne Mutahi, we just say the words goodbye, and that officially marks the close of the conference.
Goodbye, everyone.
Goodbye, everyone. Thank you, Anne.
Thank you, and goodbye, everyone. Thank you very much.
Thank you, Tyrus and team. Fantastic.
Thank you very much.
Thank you. Thank you. All right. And so you can leave at pleasure. Some of us might remain behind for administrative reasons. Thank you very much. We stop broadcasting now.